nearly 116,000. This is the number of layoffs that tech giants such as Google, Amazon, Apple, Meta, and many others have made so far in 2024.
The new year is not starting off on a happy note for workers at some of the country's largest tech companies, with more layoffs just announced.
This week alone, about a dozen major companies announced job cuts, including Amazon and Google's parent Alphabet.
This move is bringing the total number of employees laid off in 2024 to nearly 11,000.
In 2023, the 7 largest tech companies in the United States together earned close to $327 billion, a 25.6% increase from the previous year. This figure is comparable, for example, to the total GDP of entire countries like Colombia or Chile.
Oil companies really had record profits last year, but if you take a look at the 4 big tech companies in the U.S., their profit was actually more than the oil companies.
NVIDIA, those shares up more than 240% this year, recently closing at a record high.
Shares of AAPL, they're moving up by about 2.75%, reporting record revenue for the quarter.
Despite breaking earnings records, tech companies continue to lay off workers en masse. The rapid advancements in new technologies such as artificial intelligence have led companies to make personnel cuts on scales not seen since the 2000s.
There's no question artificial intelligence will remake the workplace.
Almost half of all global jobs could be affected by artificial intelligence.
The rise of AI could see lower salaries, reduced hiring, and even some jobs disappearing altogether.
Although on paper the U.S. economy is strong, with 9 months ahead, the number of layoffs could exponentially increase in 2024. So why do massive layoffs continue in large tech companies despite their record profits and a supposedly strong U.S. economy? During 2023 and the beginning of 2024, there was a significant increase in the number of layoffs at technology companies, including some of the largest and most established in the sector. Compared to the previous year, there has been a 30% increase in the number of employees affected by layoffs in the tech industry. Restructurings in tech companies like X, which underwent a restructuring of about 80% of its workforce, led to massive layoffs in response to advances in artificial intelligence and the need to adjust business priorities.
This morning, nearly half of Twitter's workforce waking up without a job. The massive layoffs coming 1 week after Elon Musk's takeover of the social media giant.
Twitter, the social media giant, appearing to be in disarray after as many as half of its employees were laid off.
Because Twitter was losing nearly $4 million a day.
This phenomenon was especially pronounced in Silicon Valley, the epicenter of the tech industry, where multiple layoff announcements were made by leading companies in the technology field. According to recent data, it is estimated that 68% of tech companies have implemented significant layoffs in the first quarter of 2024.
Just ask the 3,000 people being laid off at Estee Lauder.
Cutting as much as 3,000 positions. We continue to see job cuts.
The layoffs are already piling up this year, and we're just a few weeks into 2024.
One of the key reasons behind these massive layoffs was the shift in business and financial priorities of tech companies. With 25% of all layoffs announced at the beginning of 2024 being from tech companies, the severity of the situation in the sector is evident. While during the early years of the COVID-19 pandemic, the tech industry experienced significant market value growth of 14% in many tech companies, this trend began to change as economic and financial conditions evolved.
COVID pandemic eviscerated travel, cutting revenue for airlines by 90% and making hotels near ghost towns as people stayed home. The oil industry tanked as travel ceased, further putting strain on producers in an already weak global economy.
The increase in interest rates and the restriction of access to capital affected companies' ability to finance their continued expansion and growth. As a result, many companies were forced to reassess their business strategies and adopt cost-cutting measures, including mass layoffs. Tech stocks experienced a 43% increase in the NASDAQ during 2023, partly driven by massive layoffs and internal restructuring of tech companies.
Stocks surged on Thursday with the S&P 500 and NASDAQ closing at their highest levels in 14 months.
Microsoft up over 1%, NVIDIA to a record closing high, that's up 1.88%.
The advancement in the adoption of disruptive technologies, such as artificial intelligence and automation, contributed to layoffs in the tech industry. As tech companies seek to improve efficiency and reduce operating costs, they are increasingly turning to AI and automation to perform tasks previously done by human employees. While this can create efficiencies and increase companies' competitiveness by about 40%, according to recent studies, it also has the potential to eliminate traditional job roles and contribute to growing concerns about job loss due to automation. According to a report by Goldman Sachs, AI could replace the equivalent of 300 million full-time jobs.
Advances in technology and the emergence of green economies will further disrupt labor markets in the coming years.
Artificial intelligence could replace millions of jobs.
AI will replace 4.8 million American jobs.
The growing development of technologies such as artificial intelligence can open up other job opportunities related to improving AI. According to a recent report from Indeed, there has been a 500% increase in the number of jobs mentioning generative AI, reflecting the growing interest in this area. However, despite the increase in demand for workers with AI skills, the report also indicates a significant shortfall in the supply of qualified talent, with a 6,000% increase in job seeker demand for these jobs.
The rise of artificial intelligence has many Americans concerned the technology could replace their jobs. However, those well-versed in AI may be at a huge advantage in the workplace.
Generative AI generating opportunity in the labor market, with job postings climbing 6,000% this year.
A growing number of companies in the U.S. are willing to pay salaries approaching 7 figures to hire professionals skilled in artificial intelligence.
Despite the apparent solidity of the U.S. economy on paper, with positive figures in terms of job creation, uncertainty persists regarding the effect that tech layoffs will have on other sectors and the economy as a whole. Although tech layoffs have raised concerns about the stability of the labor market, unemployment figures have remained relatively stable, with an unemployment rate of 3.7% in January 2024, compared to forecasts of 3.8% at the beginning of the year.
Unemployment claims in the U.S. are down this week after staying flat the week before. New data from the Department of Labor shows there were 239,000 new jobless claims in the week ending June 24th. That's down 26,000 from the week before.
U.S. economy added 2.5 million jobs in the month of May.
We've got a 275,000 job creation number, way higher than the 200,000 that was forecast.
As the tech industry continues to experience a series of significant changes, both employees and companies must adapt to an ever-evolving work environment. While layoffs may be a difficult reality for many workers to face, it is also important to recognize the opportunities for new jobs that innovation and the adoption of new technologies are driving.
My biggest worry is we need some new technology that starts driving real productivity. It's time for some real innovation.
Do you think it'll drive up wages?
I do believe it'll drive up wages.
They don't replace human labor. They just require different forms of labor to sort of, babysit them, to train them, to make sure they're working well.
It will be crucial for tech companies to adopt proactive approaches to promote diversity, equity, and inclusion in the workplace, invest in retraining and reskilling programs, and collaborate with universities and research centers to drive innovation and technological advancement. By doing so, tech companies can mitigate the negative impacts of mass layoffs and position the industry for future success in a constantly evolving labor market.
At Economy Media, your opinion matters to us. Subscribe and let us know what you think in the comments below.